Hello, traders. Um, I want to talk to you about today. This is a peak. Full disclosure, I did not trade well today. I have nobody to blame but myself. I did not mark up my charts. I was trading just based on insane price action and trying to catch, just hoping to catch a trade. I was gambling. I didn't mark a dadgum thing. And the reason is I was out late last night and I did not get a good night's sleep. And I lost a lot of money at $50 stop losses trading micros. How many? How much do you have? How many micros do you have to trade at $50 stop loss to lose $900? I'll just tell you this much: it was a lot, and I made all of that $900 back once, and then lost it, most of it again. Not all of it, but I lost a bunch of money, and I did yesterday too. I was looking for reversal trades. Got involved in the Asia session. I got so close on that combine. I thought, man, I've got this stuff down. I don't even need this. I don't need that. And a lot of it was due to a lack of sleep, but I can't blame it all on that. A lot of it was hungry eyes too. So I was wanting things to happen that just weren't happening. So the purpose of this video is to tell you that, number one, I'm not perfect. I mess up just as much as anybody else. But if we really look at this price action, we can see even on a bearish day, there are reversal points. There's highs and there's lows, highs and lows and highs and lows. And why is the market stopping here? Why is it stopping there? What about there? What about here? Why is it stopping here out of all places? Why would it just stop there and reverse? And if we really dial down and we mark our charts up like I did not do, we can find out why it's doing that, why it's moving the way it's moving. Okay. So that's the purpose of the video. I'm going to zoom in on the day a little bit here and show you the very first little bit of price action. This is from 8:30 to opening range. That's the whole opening range right there. How many points is it? Let's see. This may put my lines on here, but maybe not. Let's see. It's 240 point opening range. That's a lot of movement for an opening range for the first 30 minutes of the day. That's what we had. Okay. So my point is, if you're just looking at this price action like I was today, and I wasn't marking things up, I would mark a few here and there. And when I did, I caught some good trades. But then I went back to not marking things up. And the only thing I had marked was the first presentation fair value gap up here. And I tried to take a trade off of it and it got smoked right there. And that was such a violent move. It kind of pissed me off and I quit trading Nasdaq. I went to trading gold for a little while. And when I came back to Nasdaq, we'd had this giant move and I was like despondent, like, oh gosh, I missed it. But I also thought we're going back to first presentation fair value gap on this and watch my profit erode right there. So I just made a lot of mistakes today. It wasn't a good trading day for me. The market was absolutely insane. Trying to get involved on a down move, anticipating where it might draw to, and then it would draw there and maybe rip up even higher, or I couldn't get filled. I would do try to do half candle fills, couldn't get filled. And so it was just a very frustrating day, to be honest with you. And it didn't have to be. A good night's sleep, marking up my chart would have fixed everything. But I got a late start. I didn't mark any of the daily chart levels. I would go and mark them as it was approaching them, but I messed up. I messed up today, bottom line. This is the entire movement of the day, and it looks quite chaotic and quite random about where these prices are going and why. I mean, if you just saw that, you'd be like, well, that's completely random. There's no way possible to trade that. because you don't know when it's going to stop. You don't know when it's going to go the other way. What do? Well, you do what I didn't not do, but you mark your chart up as you go. I did not do it. Let's see what I got marked on here now. Okay, so now we have something, points of reference that we can work from. Okay, the first thing I marked was the first presentation fair value gap. It's right here. And we touched it and we came down. That's pretty early for me to get in on a trade, so I didn't do that. But when it came back right here, I did sell one short. I was aiming for this low and we got ripped. I mean, that's over a 100-point rip. The significant thing, we did open with a gap down, very, very big gap down. And that when we didn't take this high, we didn't bite into that at all, indicating a bearish day. In a bearish day, it's good idea to sell short. But what was I doing? Trying to find longs, trying to find a reversal, because I thought we'd sold off far enough. I don't know if I've told you this before, but the market doesn't care what I think or what you think. It just does its thing. And so if you think it's sold off and it's going to go back up, guess what? It may not. So we get ripped here. I get pissed off. I go to gold. I come back, and this is what I'm looking at. Oh, man, I missed the big move. We already took that low. I missed the big move. But the fact of the matter is we did have a reversal here. Now look at this. If I would have had this marked, this is a fair value gap on the daily chart right there. Okay. If you go to the daily chart, you can see I've got this highlighted right over here. Okay, so when we were going up, we offered buy side only, but no sell side. So this is an area where the market would like to trade to. And then let's go back to our 1 minute. Okay, so that's what we did. We opened. We did finally, and once we pushed through the fair value gap, we wicked right back up into it right there. And we started trading down. We took out that low. That would have been a nice little money maker. But look at this. This is a run on liquidity right here. And this is the last down close candle, that run on liquidity. That's significant. Okay. Because when we come back up, where do we go? Right to the base of it. There's an entry right there. If I would have had that marked on my chart, I could have been funded today. Didn't have it marked. Only had the first fair value gap marked. Okay. We trade down. When we trade down to this, we go through the low on the weekly chart, which I did have marked. But then we stop right here and rock it right back up. Why did we stop right there? That's that fair value gap. The people with big money that wanted the price to stay above that had a lot of orders there. And so it wanted to go back up before it bit into there. We mark this. That's the last up close candle before that run on liquidity. We wick right back down to the top of it and we go on a run. We don't quite take these highs before pulling back. Last down close candle before this run on liquidity, which actually just matched that high. We come back down into this fair value gap right here, creating another last down close candle before this run on liquidity. Fair value gap right here. We wick into it, but we don't. The candle bodies do not violate even the bottom of it. They did violate the top of this breaker, number one, but eventually we start trading down. Once we trade through it, you're good to take a short. That's a huge move. You were good to take a short once we traded back through it, but typically it'll come back to it, and it didn't. What did it come back to? This one. Once we pushed through it, if you would have gotten in here, you'd have got smoked. When we rejected here, we never did push through it. You could go long there. Aim for some of these highs if you wanted to try to trade in all that chaos. But we know we had this one that we needed to push through in order for it to go lower, and we didn't push through it. So you could take a long right here at the top of that and just aim for low-hanging fruit. Okay. We rejected off of this breaker number 2. We started trading below it right here. Candle bodies are respecting it, so we could sell short somewhere around here, or maybe even here. Now we're through the other breaker. We can sell short there. We could try to get back in right here. Okay, any of these options would work. And now we're down into this guy again, and we violated it. That usually means we're going to continue to sell off. But by now, we're at lunchtime, and the market likes to go back up at lunchtime. So we tried to get back up into this breaker, couldn't make it. Did a little dance, came down. Where do we go to? The center point of that fair value gap. So now we've taken out half of the gap, fair value gap, from the daily chart. Look at this one. This one's a tricky one. I needed a green candle because that was obviously a reversal. So I had to go to a 30-second chart to mark out that green candle. Let's see if I can find it. Right there. I had to go to this 30-second chart to mark out that green candle. Look how the bodies are respecting it. You wouldn't know that. When you see a big sea of red like that, go to a smaller time frame and find the last up close candle. Mark it out. Even though it's a smaller time frame, do it. It respects it. I saw one on a 30-second chart the other day and I didn't trust it. But trust me, it works. Okay? So we come back down, we wick into it, but we do not violate it. You're good to go long. Where do we aim? A recent swing high, either here or here. Where does it ultimately go? All the way up into the breaker. We'll call that one breaker number 3, right here. We did push through it with one candle body right there. So we were coloring a little bit outside of the lines. But if you pair that with a fair value gap, like this one right here, you can see we just wicked into the bottom of that sucker. Barely wicked into it. Okay? So we have these points of reference on there. And once we wicked into it, once we start trading below breaker number 3, we're good to go short. Where do we aim? How about a complete fill of the gap? Oh, very nice. Okay, so now we have the last up close candle before that run on liquidity, run through the fair value gap. Once we start trading above it, we can start looking for longs. What about if we get in on a long right there? We wick down into 25% and we go back up. Or we could try to get in a long right here and just aim for that. We go back up, and where do we trade to? Bearish breaker number 3, wick into it. One more time. And then we sell off. Where do we go to? Oh man, we push through all those lows. Keep going all the way down here to a new week opening gap from the daily chart. The new week opening gap is marked out right there from the daily chart. I'll show you where it is, where I have it marked out, so you'll see what it looks like. There it is. Right here, we opened here, closed there. And then we opened here. You know what? I've got it, but we closed here, opened here. I need to move this line up to there. Perfect. Okay. So that's our new week opening gap. This one, see how we close there and open there? There's a tiny one right there. Very, very tiny. I don't even know if it's a full point. It's 46 and that's 45. So it's like 0.25 of that gap there. So we won't worry about that one. But the fact of the matter is, we trade down into the new week opening gap. And then we reverse again. I bet you if we went to a smaller time frame, we might be able to find a candle that it traded through here, but I don't think that one's necessary because we're at the end of the day and the moves have already taken place. So ultimately, what I want to show you here is if we mark our charts and we get these reference points as the day is unfolding, we have a structure that we can play around with here. We have reversal points, points to get involved. See how that works? Breaker, fall out of bed. Breaker, fall out of bed. Breaker, fall out of bed. Going to the upside. Breaker, continue up. You could probably mark something out over here for that being a breaker, but I'm not even going to get involved with that. If I would have been focusing on downside moves only today and not worrying about reversals because I thought the market had gone down far enough, it would have been a whole lot different day. I sure do hope you can use this information to try to get some sort of structure out of a completely random day. I don't want to really shrink it up much more than that because I want you to be able to maybe even screenshot that and use it for start marking up your charts like that because there is definitely a structure to it. It's not random. It's not an algorithm is delivering this price, or it would not stop at these fair value gaps. It would not stop right there. It would not stop right there. And it would not stop right here. Why not go for these lows? It was just going after that end wall. Probably both of them. If I marked out the other one, even though it was just 25 cents difference, it was definitely an opening day and open for that week, and it went to it. I sure do hope this helps. Don't do what I did. Put in your homework. Get up every day. Get a good night's sleep. Mark your charts out. Even things that may seem insignificant, go ahead and put a mark on them. It is a lot of lines. I understand that. Most of these, they came along as the day unfolded. They weren't like whenever I took my first trade, all I had on here was the first fair value gap. That was it. And I was thinking downside because we opened with a big gap down. And imagine how frustrated I was when it rips 100 points against me with a volume imbalance to stop me out and deal me my first loss. That was frustrating right there. But that was the trade right here. If I'd have got in right there, we'd have been talking about me and my new funded XFA. But I got my butt hurt. I got a little upset and I threw my hands up and went to trading gold. Why would the market stop right there? Why does it have to be that random that it would just stop right there? Why would it stop right here and pull back? Random? I think not. It is using these as reference points. This little pullback right here, you think that's insignificant? Well, let's measure it. That is 153 points. That's on one micro. That is $306 on one micro. If you traded E-minis today, there is no way your account survived. No way. If you traded more than one micro, unless you were at one of these entry points, your account probably didn't survive. If you were just trying to randomly join somewhere, no way. You've blown up your stuff. I love each and every one of you. Remember to be kind to yourself and be kind to one another. There's enough people out there spreading hate and discontent, and I'd like for the people that watch my videos to spread a little love instead. So until next time, if any of y'all have any questions, any comments, anything, just put the comments in the description, or put a comment in the video or whatever. If you're not subscribed, please subscribe. Trying to build the channel up a little bit, and that would sure help the algorithm refer it to more people if you were to subscribe. And yeah, so let me squeeze back over here one more time, try to get you a screenshot view. If I would have had my chart marked up, if I would not have had such a late night, that's all right. My account survived. Monday, it's on. We're marking it up. We're going to make some money. Until next time, trade well, ladies and gents.